Good afternoon. This Tuesday, August 12th. Of course, today the big August WASDE and crop production report, and the USDA, well, did not fail to entertain us. Corn yield of 188.8 bushels to the acre, and that is, with fringe acres added in. Not like Iowa and Illinois jumped any acres here to help build that number up. So again, we're probably dealing with another year where the USDA is way too high early, and they'll fall off as the year goes by. Most importantly, it's that October crop report. So let's take a look at the numbers and why the soybean market popped with that 53, almost and 3/4 bushel yield. Well, here we are, 188.8 bushels to the acre, and of course it was the acreage jump. We ended up adding 2 million acres, 97.2 million planted, so they're giving us a harvestable acreage of 88.691, of course 2 million above the average guess. So that gave us a total production 16,742,000, but it's interesting in a second how the carryouts eat up a lot of that. Soybeans, 52.9 was the guess. We got an amazing 53.6 record, but again, down 2.9 million acres on plantings, and so harvestable 80.1, down from 82.56 million acres. That gave us a production number 4,292,000, 80 million bushels, almost less than the average trade guess, and so that's where the fireworks came from on the grains. As we ended up getting the stocks number, this is comical, down to 1.3 billion bushels here almost. And by the time they get done with this thing, it's probably going to be under 1.3. And remember, last year, this thing started over 2 billion. We were like 2.1 billion bushels. And here we're going to end out down 1.3 when we get to next month's closeout. And here's a new one, 2.17. So I look at this and I kind of laugh that that's probably the highest number we're going to see for the rest of the year. Plus, wait till we probably get a trade deal with China and then chew into that. But this is the number. Even old crop, 330 beans, down from the average guess of 345, and last month 350, dropping 20 million bushels. We come into a new crop carryout, not only down 20 million from last month, but well below the average trade guess, 358 down to 290. This, we get a Chinese trade deal, we're going to be at below pipeline supplies, and we're going to have beans north of $14 to satisfy the Chinese now, if they are required to buy some beans from us because of our trade deficit. We'll see. The wheat number wasn't that bearish, but the grain trade, certainly on the carryout, with the carryout expectation was 883, down from 890 to 869, but the corn was just too heavy. A lot of wheat gets fed, and so when the corn drops, available supplies, that pretty much is a weight to the wheat trade. Just a quick look here before we move too far. Corn planted acreage, the changes. Well, obviously, the I states, that's not where the increase came from. A little bit from Nebraska and Minnesota, South Dakota, Kansas, Ohio, Wisconsin. And these aren't the guys that produced the big yields that pushed that number up to 188. Here's interesting, North Dakota, increase of 8.2% acres, and they're thinking we're going to have as large of a crop as 2016. The last year we had a lot of moisture like this, but here the catch is in 2016 we had a lot of sunlight. It would rain an inch, 10 days of sunlight, and then rain an inch. Now, over the last 60 days, we've had a lot of hazy days, smoke-filled days, cloudy days. Sunshine has just been prevalent over the last week. And so we need a late fall, and there are some weather forecasters predicting that North Dakota, we could be freezing up here way too soon. So this will be a big waste for the increase in acres. That'll be a miss. So nonetheless, we'll see how the USDA pans out with Mississippi showing a 17% increase in acreage. Boy, that's a real barn burner for getting 188 bushels to acre. Oh, and let's not forget Arkansas. That's really going to pump us up there. So I don't know. They can play their games to come up with 188 because they think the yield is so huge. But I guess we'll find out. It all comes down to October. Of course, soybeans, here's where the acres were lost from. Kansas, Arkansas, Mississippi, pretty much the same ones. Louisiana, the ones that had picked up on corn were losers in the beans. And North Dakota left unchanged. Found that surprising. But probably less spring wheat is where we went to with that. And speaking of the wheat, spring wheat yield down 484 million from 495 guess, down from last month's 504. So spring wheat was supported today, not falling out of bed with the wheat trade. Otherwise, total wheat not far from last month and slightly above the average estimate. And then finishing up on the world stocks, Obviously, corn getting pumped here. Average estimate was 279. And of course, we got 282, 3 million metric tons higher. Slashed in beans. And the wheat, this is surprising here. 2615 last month, 2617. I always make fun that there's a 8.5 out of 10 chance this number climbs. Not this month, but still wheat down today. But you can see the building of wheat trying to create a value base. If you're getting value from this video, I encourage you to subscribe to our services via the QR code you see here. You can take a picture of our link at the beginning of the video, or else you can go to our website, heartlandinvest.com. You get morning texts on what has happened overnight going into the day. You get afternoon updates of what's taking place via these videos or a newsletter, and you get valuable intraday text alerts about things that are happening around the world affecting the markets real time. So corn. Here's the September corn contract. Broke, but isn't it amazing? Sudemeyer, he put in 188 from StoneX, and then we bounced, and we received a 188.8, shoved us to a new low. Yes, and we closed at a new low. We'll see here how this shakes out because the beans and the meal might affect this corn market here going forward and giving us a different price. This is September corn. Straight down on the continuation chart on this low that is already challenging last year's low. And by the time we get to next week, December comes on this chart. And of course, it'll come on at a bit of a premium, 20-cent premium to the September contract, probably holding the 367 range. And remember, wave twos can allow for a couple of days below a prior low and still turning higher. And higher would be that demand that maybe comes from China. Or put it this way, they aren't selling the corn much cheaper out of Brazil. And so as our corn gets cheap like this and the Brazilian real rallies, we're just going to sell even more corn, more flash sales. And again, surprising weekly export sales numbers and surprising weekly export inspection numbers. Again, USDA will, as always, get demand wrong. I've been saying this for over 10 years, and they continue to prove me right, not wrong. Maybe what we need is President Trump to fire the head of tabulation from the USDA like he did last week with such horrible job number recalculations. And the USDA is probably even worse because they will always get away with retabulating. But you know what they always do? Big yields and low demand early in the crop season to drive that price down for end user buying. Well, moving on to the beans. This chart, we pretty much can throw it away because it doesn't work. Wave 4 can't be this high. We stalled yesterday and sold off into the report right from $10.15 where it needed to stop. But doing this changes everything. So we have to go back and relook and realize that since the high in beans, we had this 1, 2, 3, which is classic, wave 3 long, and wave 4, which still can be in play. And even in the current downdraft, today's high with November, if it was on the lead chart right now, would stop here at the purple line, which is 1037. Well, today's high is 1035, but we'll see if we push through that. We have further strength that can be seen. And the best thing we can do is take the low made back in late December, call it a 1, 2, and another 1, 2. And we have a potential 5-wave, 3-wave advance coming here. This could be wave 1. And of course, moving averages are fun when they work, but as of late, it's just chop, chop, chop. But if we could pull back in a wave 2, probably stalling out just above here, wave 2 holding moving average support and turn up, it would be nice. But wave 2s are always a bugger. 786 retracements, and that's where we're probably going to. In the short term, look for a high between the 62% retracement and the 78% retracement up here into this 1040 some range, 1045. Then they'll roll over, do a nasty wave 2 pullback again. Probably a 78% retracement above into the valley range here. And from there, we get another wave 3 lift sometime in September. And maybe that's China, maybe appeasing President Trump with the tweet that he put out Sunday night saying, start buying our beans, quadruple your purchase from us. Maybe something shows up given the fact he did grant them that extension. We'll see. But I'll tell you what, soybean meal had a doozy today. It's turned up since the beginning of August. And today's $10 range caught those funds by surprise. They're short 140,000 contracts. And the market's looking kind of good here above the purple line. Granted, it got stopped here, but a couple of days holding up here above moving average support in the 280 range here can probably likely get us a rally in the meal, which lifts the bean market. Canola pretty much buried soybean oil today, with China again fighting with Canada on canola and more tariffs, and so we're going to get to absorb their canola. Now on the cattle market. Now, if this is a wave 5 high, we had an initial break, and now we're in a wave 2 or B recovery rally that can carry us on the intraday charts into a 786. Probably can still get them back over 230. Massive box beef price increases today certainly supports the August cash trade, but last I looked, October cattle, they expire at the end of October. Now we'll see what kind of cash trade holds up into October, but nonetheless, on the charts, we should run into resistance here in the 231 range, which can turn this market back softer. Now, if we go to feeder cattle, if this is a wave 5, we're getting a wave B bounce here for an A, B, C, or maybe it's a deeper 1, 2, 3, 4, 5. We'll find out in time. But a B wave here, Fibonacci retracement got close today. The 347, 348 range, I would say, is your targeted area for resistance. Remember, B waves can do a pop to a new high and close there as long as the next day they fall out of bed. Initial support here on this break after 236 on my daily shows my moving average support on an intraday chart at 331, which kind of lines up with already support we had known from the beginning of August. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.